Hi, everyone, and welcome to today's webinar, Investing in Canada, a Guide to Self-Directed Investing for Newcomers. My name is Riley Cohen. I'm the CEO of CanadaVisa, and I am really excited to welcome you here today. We're going to start this webinar with a presentation from our guest from TD Bank. After the presentation, we'll have a question and answer period, giving you the opportunity to interact with our guests. Many of you have submitted questions prior to the webinar, and we're going to answer as many as we can, again, at the question and answer period at the end of this webinar. Of course, we encourage you to continue to ask questions in the chat throughout the presentation. We have a team of moderators that are going to be sifting through your questions, adding them to the question queue, and we'll get to as many as we can at the end of the webinar. Great. I'm now happy to introduce our two guest speakers, Caitlin Cormier and Ayami Kato. Caitlin is a client education instructor with TD. She has spent her career supporting clients with their finances in branch banking and wealth management. She is always excited to share her passion for education and learning with self-directed investors. She strives to deliver an engaging learning experience, which leaves people feeling confident in their ability to meet their financial investing goals. Caitlin is an East Coaster from Nova Scotia who loves staying active and spending her spare time with her two dogs, Archie and Bobby. Thanks for joining us, Caitlin.
Thanks so much.
Ayami is a client education instructor with TD.
Hello.
Ayami is a first-generation immigrant who brings over 15 years of experience in the investment industry. She's held various roles within TD, from TD Financial Planning to TD Direct Investing, giving her a comprehensive understanding of the financial landscape in Canada. Ayami is passionate about empowering both Canadians and newcomers to achieve their financial goals, recognizing that education is key to building confidence in investing. Once again, thank you so much for joining. Before we start with the presentation today, I want to remind everyone that this webinar is being recorded and that you'll receive tomorrow a recording of this webinar, as well as more information and the slides from the webinar today. I want to remind everyone that the chat is public, so do not share any personal information, such as your phone number or email, in the chat. And once again, we'll have ample time at the end of the webinar to answer questions, so we encourage you to engage and put your questions in the chat. Awesome. I'm going to hand it off to Caitlin and Ayami to start the presentation. So thanks.
Awesome. Thank you so much. Really excited to be here today and have the opportunity to chat with all of you a little bit about self-directed investing. We're going to cover lots in our time. We have a short period of time and lots to cover. So let's go ahead and jump right in to our session today. Before we get into sort of the meat and potatoes of today's session, just a quick reminder that today's session is an educational session, so nothing that we discuss should be taken as advice or a recommendation. We do not provide financial, legal, tax, or investing advice, so just keep that all in mind as we go through today's session. We're also going to talk about some different types of investments, including mutual funds and exchange-traded funds. Just to keep in mind, if you do decide to invest in something like this, you do need to make sure you do your research so that you understand any fees associated with these types of investments. They work a little different than other investments. So just keep all of that in mind as we go through today's session. As you can see, I've got a bit of a different hair color in this picture, but as you can see here, I'm Caitlin, Senior Client Education Instructor with TD Direct Investing, and my lovely host Ayami is here with me today. And as I mentioned, we're both really excited to get into today's topic. So what are we actually going to be covering during our time together? So here's our agenda. We're going to talk first a little bit about self-directed investing. So what is self-directed investing? What might it look like to be somebody who might be appropriate for self-directed investing? What type of investors would that look like? We're going to talk about investing goals, the investing journey, how you can get started, as well as talking a little bit about growth and the power of time being invested for kind of a period of time. So let's go ahead and kick it off with understanding if do-it-yourself investing might be right for you. And Ayami, why don't you take it away?
Yeah, thanks, Caitlin, for the lovely intro. So, yes, in Canada, you could hire an investment advisor or a financial planner, or you could invest on your own. And it's called do it yourself or DIY investing or self directed investing. And Caitlin and I are from TD Direct Investing, which we offer do it yourself investing. And what does DIY investing will actually mean? You are basically hiring yourself as an investment advisor. And what's the benefit of that? Well, you could be a beginner or you could be a sophisticated investor. Experience doesn't matter. And also, there's no minimum amount you need to invest. And also, fees too. In general, it is lower than hiring someone. So, to be a successful DIY investor, what do you need to do? Well, you have to be able to do these three things: learning, researching, and trading. And you have to do these on your own, but you have TD Direct Investing's support. So, what does it mean by learning? Well, how can you learn through TD Direct Investing? Well, we offer various online classes, master classes, we call it, and it's very interactive. Caitlin and my main duty is to host these classes, arranging with different topics. And we also have on demand video content through our learning center. And we have new live shows almost every week, and we invite industry specialists from inside and outside TD who will talk about personal finance concepts as well as the economy in general. And so you get to learn, you get to have access to all these free learning tools. Now, once you have some investment knowledge under your belt, well, you have to now start researching on which investment could be suitable for you. And this is where our platforms offer various research tools, including researching market and investment data, news and reports. We also have tools like screeners and charts, technical analysis tools where you can analyze all these charts, read all these different financial statements of stocks, as well alerts and watch lists to manage all these research. And then lastly, as your own investment advisor, you have to buy and sell all these investments that you may narrow down. And trading is also done we offer lots of supports. It's very intuitive, from those easy mobile apps where trades are just tap away to very sophisticated tools for those active traders with those different monitors, multiple monitors. So you've got lots of choices in terms of investments and platforms, and all these different tools are available under your fingertips. Now, the first thing when starting your investing journey is to identify your investing goal. So Caitlin's going to talk about the common investing goals.
Yes, absolutely. When we think about investing, oftentimes we jump to what are we going to invest in? What are we going to buy? What does that look like? But there's so much work that has to be done before that you kind of jump into what type of investment to purchase. And that looks a little bit like figuring out what your goal is. So this is kind of our first step when we talk about investing, is figuring out, what are you saving for? Are you just looking to grow your money? Are you looking maybe for a specific goal like home ownership? Maybe you're looking for your retirement. Perhaps it's generational wealth. You want to pass money down to your family. These are kind of just some common goals, but it could be other things. It could be vacations. It could be, any number of things. Maybe you're looking to buy a second home or something like that. So we want to actually get to know a little bit about those of you who are here today. So we actually have a poll that we would like to know. So you should be able to see it now on the right hand side of your screen. What are your main financial goals? Is it retirement? Is it a major purchase, generational wealth, or is it something else? The reason why knowing your goals is important is because it can actually help you in the process of setting up your investments. So once you know what you're investing for, a lot of other things can help fall into line. Also, if you know what you're investing for, it gives you an idea of how much you need to save. If it's for a house, then you know you need a down payment. You can choose what amount of a down payment you'd like to save. If it's for retirement, you need to understand how much money you're going to need each year in retirement, and then kind of work backwards from that to figure out your investments. So it's definitely a key part to understand what sort of things you're investing for, to make sure that you can set your investments up the best way for you. And as a self-directed investor, you're the one who has to make those decisions and has to figure out what your goals are. I'm seeing the answers coming in. They are coming in fast and furious here. Yeah. So I'm going to go ahead and end the poll in 3, 2, 1. There we go. All right. I think everyone should be able to see. So it looks like majority of you are looking for that generational wealth. And that's great. That's the idea of just sort of letting your money continue to grow over time. So your family, after you're gone, your family has something to help them moving forward. Next up is other. So interesting to hear, maybe in the chat, if you can let us know what it is that you're saving for. Feel free to let us know. Then we have our retirement and major purchase. So everyone's saving for all different things. And that's another key thing to remember, is that everyone has different savings goals. Iami, what's your main focus right now for saving?
Right now, definitely the FIRE. I'd love to retire early. My initial goal was like 34. I'm well past that, so I'm calling myself forever 34 now. But yes, retirement is coming really fast and furious, like you said. So that's me. How about you, Caitlin?
Retirement is always a goal for sure. I don't want to be, working well into old age. I want to make sure I retire at a time that I can still enjoy life. But I say also my other goals are kind of more short term. I'm looking at, vacations and those sorts of things. I don't want to have to borrow for anything that I don't need to. I don't want to owe money if I don't have to. So I would say I have definitely retirement is important, but also very important for me to have other goals as well, like short-term trips and stuff like that. So maybe to some of the beautiful countries that all of you are from that you've shared so far.
Yeah,
You've got I've got trip and
location, right?
So that kind of brings us into the idea of different types of goals have different lengths of time that they will take to attain those goals. So some goals are really short term. Maybe you're looking to build up savings. You just want, short term savings in case something happens to your vehicle, if you need to purchase something, any type of emergency funds, just funds to sort of set aside. That can be really short term. Maybe you have more intermediate terms, so maybe 3 to 5 years, like trips, vacations, renovations, those sorts of things, maybe major purchases that you might have that are between that 3 and 5 year term. And then there's longer term. So we're talking maybe children. Maybe you're looking at save for your child's education, your own retirement, or that generational wealth. All of those are longer term goals. So we have more time for our money to grow. And it's important to understand where your goal fits in these different time frames, because it'll help you when we get to the next step when we're talking about investment types. If I have a really short time frame, I can't really afford to take a lot of risk with my investment. I need to make sure my money's going to be there when I need it. Whereas if I have a longer period of time, then I can take a little bit more kind of risk or volatility and have more potential for my money to grow over the long term. So understanding our goals, understanding the time frame, and then I'll throw it over to Iami to chat a little bit about different investment types.
Right. Thanks, Caitlin. So yes, the time horizon is key here, because it will really determine what types of investments may be suitable for your goal. And there's many investment options available in Canada. And let me just advance the slide there. So we'll talk 4 different asset classes today. And in summary, each asset class here, so cash equivalents, fixed income, equities, and alternative investment, they all play a unique role in a portfolio. So cash and cash equivalents, think of, the cash in your savings account, checking account, or even in your wallet. It does provide safety. So your cash in your wallet, unless somebody steals it, hopefully not, it is there, right? So it's very liquid. You can use it anytime, but it has limited growth. The cash in your wallet, it won't grow. Savings account too, the return is very low if there's any. Now, if you see the arrow below, we're kind of going up in risk scale as well as potential reward or return. So the next in line is called fixed income, another major asset class. And you might have heard of bonds. So if you buy bonds or fixed income products, you're essentially loaning money to the entity, like governments or corporations. And in exchange, because you're loaning money, they promise you to give you periodic interest payments and also return you the loan. They're legally obligated to pay you back that loan when it's due. So historically, in general, it's less risky than stocks, which is the next category we'll talk about. But also, the return is historically lower than our next category, which is equities. Now, equities is a fancy term for ownership or stocks. So if you purchase a stock, it represents ownership in a company. So if you go to, let's say, a holiday party, which everyone's going to join pretty soon, if you buy a stock, well, if you introduce yourself as an owner of a company, of the stock that you purchased, you're not technically incorrect because that's what it represents. And why do investors may invest in stocks? Well, they're looking for growth, potential growth. As the company grows and also grow their profit, investors hope that the stock price also goes up. But compared to the two previous asset classes we talked about historically, volatility or the risk is higher than those two. And the reason is because stock price fluctuates and it depends on how healthy the company is, how other investors perceive their value, as well market conditions too. And lastly, alternative investments. So think of precious metals, futures, options, or real estate, or cryptocurrencies. Those fit in alternative investments, and it has the highest risk. And one reason is because there's lots of unknowns, like cryptocurrency. It's relatively new. There's no historical return risk data. And also it's very complex compared to the other asset categories. So through TD Direct Investing, you can't directly invest in these as alternative investment, but you could invest indirectly through what's called an investment fund. You might have heard of exchange traded funds, ETFs, or mutual funds. And they offer a way for investors to pull money into a fund and then make investments in a collection of products. And that could include alternative investments, or it could also include other asset classes we discussed here, and not just one type, but it could be a mix of all of these. And mutual funds, exchange traded funds, all have different goals. And essentially, you're hiring an investment advisor to purchase all these different assets. And it could offer different types of diversification, so you're not invested in just one product. So a well-diversified portfolio typically combines these assets to balance risk and return according to your investment goal. So that's why defining your investor goal is very important, because time horizon is a very important criteria to determine which asset classes are appropriate for you and the extent of how much you should put in these portfolio. Okay, so now Caitlin's going to talk about the different account types in Canada, and that's another decision you need to make once you have an investment goal.
You got it, Ayemi. We've kind of gone through a couple things so far. First thing is defining your goal. Second, figuring out your time frame. Third, figuring out different investment types. And now we are on to account types. So when you're investing, there are specific account types that you can put your money into in order to make these investments. Now, there are two categories of account types. There are registered and non-registered accounts. Non-registered accounts are available if you're not a permanent resident of Canada, they may be the only type of account that you're able to open to start. Once you're a permanent resident of Canada, you have the ability to open up these registered accounts as well. So the difference between these two accounts is with a non-registered account, everything that you earn in the account will be subject to tax. So you'll receive tax slips every year for all of the money that you earn. So for example, interest, dividends, those sorts of things. You'll receive tax receipts and you'll have to claim them on your personal income tax. If you were to look at a registered account, they have preferential tax treatment. So there are, depending on the type of account, for example, a retirement savings plan, a tax-free savings account, an education savings plan. Each account has sort of different types of different features or different benefits depending on the account type, but each one of them has some sort of a kind of special tax treatment for your investments. So for example, a tax-free savings account, as long as you're a resident of Canada and you have a social insurance number, you should be able to open up a tax-free savings account. And then all the money that you put into this account, whatever you earn on it, you will earn tax-free. So your returns, your dividends, your interest, all those sorts of things are all tax-free. And so it can be a really great way for you to have your money grow within the account and then keep all of the returns instead of having to pay any of it in tax. So we have classes that go more in depth into these different account types and kind of specify which account type might be best for different types of goals. But for today, just to kind of understand that there are registered accounts as well as non-registered accounts. And depending on what your goal is, you kind of can make the decision as to which account makes the most sense for you.
Perfect. Thanks, Caitlin.
Right.
Yes. So account types, another important decision you need to make when you start investing in Canada. And I wanted to do a quick poll again. Are you confident in your level of financial knowledge? Just want to see where everybody is, because to get to your financial goal, you need to have financial knowledge. And I came from Japan, where back then, 20 years ago, a lot of people just kind of invest, quote unquote, in cash. They just leave their savings in cash. I didn't have much financial knowledge. I thought investing means putting in a savings account. So how confident are you? So I started like at zero level of knowledge, and I'm just curious how confident you are. And let's see. We'll just wait a little bit. How about you, Caitlin? When did you start investing, or when did you kind of start? Yeah, I'm curious, like, because you grew up here, you were born in Canada.
That's right. Yeah.
Do you start like these personal finance or investing knowledge early? Because in Japan, like, I think now it's better, but back then, 20 years ago, like, we didn't learn this in elementary school.
Well, both my parents worked in this industry. My dad worked for a bank and my mom worked for an investing firm. So my take your daughter to work days were all done at banks or investing firms. So I actually had the benefit of being surrounded by money for most of my life. I guess I came by it honestly into this career. And when I started working for TD when I was fresh out of university, and I was very lucky to have an advisor who kind of encouraged me immediately to get invested. So I was able to benefit from a lot of good encouragement into the investing side of things, and then learned pretty quickly from there. Obviously started doing investing very quickly. It's interesting to see this poll. We've got about a 50-50 split. I'm very impressed.
Let me end this. So I hope everyone can see the poll result, but it shows like it is a 50-50 split, which is very interesting. 46. Yeah, it's actually very close to the Canadian average from a recent poll that TD and the Ontario Security Commission conducted. And let me just advance the slide here. So yeah, it's very similar. Half of Canadians answered in this recent poll that they don't feel confident in their level of investment knowledge. And I was actually surprised with this result because, let me share a little bit about my investing journey. Like, as I said, growing up in Japan, like 20 years ago, we don't talk about investment. Stocks just seem like gambling to a lot of Japanese, I would think, back then. Now it's different. It wasn't a topic that was widely discussed. And it wasn't until I moved to Canada that I had a life-changing conversation with my teacher, and she was 80 years old, and she lived through different, like many financial market cycles. And one day she casually mentioned to me how important it was to start investing early, especially in the stock market. And she talked about how it could potentially help grow wealth in a way that cash savings just couldn't simply do. And that conversation sparked my curiosity, and I started learning more about investing and also understand the power of compound growth. And so here I am today, sharing what I've learned, and I'm excited to share this new next concept, which we also offer through our video lessons on these investment topics that we cover in our learning center and in our classes. So let's talk about Jane and John, and fictional character, and talk about the time value of money. So there's Jane here. She starts investing at 22, and she contributes $166 every month until she reaches 30. She stops, and she contributes in total approximately $16,000. And then from age 30 to 60, she doesn't do anything. The money is invested, but she doesn't make any more contribution. Now let's move ahead and talk about John. So how about John? Well, John starts a bit later at age 30. He contributes $166 every month, same as Jane. If you do the math, it's about $5 a day, kind of like a fancy coffee that you might buy at a coffee shop. And until his retirement, so from 30 to 60 years old, he makes a total contribution of approximately $60,000. So around like $45,000 more than Jane. So let me ask you, who do you think would come out ahead if it was invested in an investment that produced approximately 8% annual return? So is it Jane? Is it John? Is it Pete? I hope no one says Pete, because that means you're not paying attention. Or do they both accumulate the same amount? So I'm going to push the poll to you.
I did push it there. It is.
Did.
It should
Okay,
be live. Yep.
And looks like, wow, I'm really impressed. Oh, actually, it's still doing. Let's just wait a little bit.
Give them time to answer.
Let's wait a little bit. Because I guess the audience can't see it, but I see like the answers kind of like growing, and it's kind of mesmerizing watching this. So
yeah, so just to go back, we're talking about the same amount per month. Now, Jane only contributed for 8 years, 22 to age 30, and then John contributed for 30 years, right?
Yeah, exactly. And like,
that's a big
$5
difference
a day
in contributions.
Yeah, and we're talking like 8% return here, and it's a question I get asked a lot, like why did we choose 8%? Well, the average annual return for the international stock market, if you look at certain time frame, it has been around 8%, and it's typically used to simulate how an investment could grow. Like if you speak to a financial planner, an investment advisor, or you use our goals tool that we have, you can simulate your investment plan, how it could grow. If you choose like an asset mix with the majority in the stocks in equities, then 8% is typically used. So that's what we're using here. So, okay, let me end the poll here. And the majority of you said John. 60% of you said John, and actually that's what I thought too, because kind of like, well, he did put like more than $40,000 more than Jane, so isn't it John? I was like, obviously, but the answer is, and let me advance the slide here. Okay, so let's go over, well, before I reveal the answer, so this is Jane. And it's scenario 1. So like Caitlin just summarized, she contributes $16,000 in total up to age 30. Then she stops. Then see, the money just kind of keeps growing if she leaves it in an investment that gave 8% return annually. And in the end, it was $243,000 when she turned 60. Okay, how about John? So John put approximately $45,000 more. So he starts at age 30, and at age 60, he accumulates a little bit more, $247,000. So yes, the answer technically, a couple $1,000 more, it's John. So you guys all got this right. But also the other answer, approximately they accumulate the same amount because it's like around $245,000, right? So both John and Jane and John accumulate around the same amount are correct answers. And to me, I was shocked because I thought John would accumulate much more, thinking that, well, he did put much more in the end of his own money, but it comes to be the same amount. And in fact, if the return was higher, Jane would come ahead. And it's not about comparing with others, but I hope this data or this chart we're showing you, it just shows you that starting early is very important because there's that power of compounding interest, which Einstein called it the eighth wonder of the world, right, Caitlin? So yeah. So like with this knowledge, like how do you feel? Like, do you feel like you missed out a lot? Well, when I saw this chart, when I first started learning about this concept, I was drawn. I started later, like around like late 20s when I learned this concept. And I'm like, oh my gosh, like if I started much earlier and just put a little bit less, my money would have grown much more. But it did also, this data also really encouraged me to start now, because starting now is important because you're at your earliest, right? So do you feel that way? Do you feel more motivated, or do you feel kind of just discouraged? Well, we don't want you to feel discouraged because it's never too late. You could change your strategy to catch up. You could increase your contribution. For example, in John's case, if you added like even $1 more a day, make it $200 a month instead of $166, your investment would grow faster with the time value of money. And also you could change your investment strategy, like, well, review your goal. Again, time is key here. So you could review your retirement goal, maybe delay it a bit so that your investment could grow more. And also review your investment mix. Maybe you're too conservative, maybe you're too aggressive, but you have to assess that. And yes, you could potentially get higher return, but you have to also think about your risk tolerance, because higher reward, higher return typically means higher risk, where the price of your investments, the value of your investments could fluctuate. So, and also you have to research more too, right? If you are investing in something like stocks, you have to research more. So you do have to reevaluate, but the point is it's never too late. And then Caitlin will talk about other fears that typical investors have before starting. And then we all go over all these different investing concepts, including the time value of money in our classes. So we really hope that you do watch our other video lessons that's available on YouTube, which we will share at the very end.
Yeah, and when I think about that worried that you missed out piece, it is never too late. I sometimes worry, even though I was lucky to start early, I wonder, did I not put enough away? Should I have saved more? I did deplete some of my investments to buy a house, which of course is a great, asset, but it does make it, feel like you're maybe a little bit behind on the retirement side, but you're absolutely right. It's just, figuring out your goal, sticking to your goal, making sure your investments match that, and staying in for the long haul, and you can definitely get there. And it seems like a lot of our attendees today are really kind of looking at that long-term piece, leaving generational wealth and that sort of thing. So there is still lots of time. Just make sure that you kind of go through your process, and we'll go from there. Okay, what else could be stopping you? So like I just said, the fear of being too late to start. You can be worried, that you haven't started early enough. But the thing at the end of the day is, if you don't start, then of course you're not going to meet your goal, right? So we want to encourage you that investing is really important. Figure out what you're investing for and start. today, start right now, start as soon as you can. And that's it. It doesn't matter if you didn't start at your 25. It doesn't matter if you didn't start at 30. It doesn't matter what age you are, just start. There's also a fear of losing money. Iami talked about it a little bit, about the idea of, if you are investing in the right investments. So one of the most important things about the fear of losing money is making sure that you're invested in the right investments for you, understanding yourself, understanding what type of risk you are able to take on your investments, and making sure that your investments are in the right portfolio. If you're really kind of uncomfortable with the market and how it goes up and down, then you probably want to have a little bit more of a balanced portfolio. You don't want to be in all stocks, picking just a few stocks and letting your money ride. You might want to be looking at something more like diversified portfolios, like exchange traded funds in different areas of the market, to sort of bring you into a little bit more in the middle, and a little bit more of a conservative portfolio. So understanding your goals, understanding your risk tolerance and how you feel about your investments, and making sure that you're investing in things that you are comfortable with. There's also fear of not having education or confidence. And I completely understand that. We deal all the time with clients who are looking just to get a little bit more confidence. The great news is we have so many resources, and there are other resources out there, but we'll show you some links at the end of today's session to go to our YouTube page, our Instagram, Facebook. You can have those links and access directly to a lot of content that we have. If you do choose to open up an account with TD Direct Investing, you can get access to all of our content on demand, as well as our live classes. We have them all the time. So you're able to partake in that. So definitely stay kind of there and figure out what we have available. Fear of commitment, so worrying about not putting your money or kind of having to kind of be in there and continue to invest can be a worry, as well as not having enough money to start, which it doesn't matter how much money you have, whatever you have available. I started with as little as $25 per paycheck. That's all you need to have in order to start. So whatever you have available is enough.
Thank you, Caitlin. So if this class interested you, yes, you may have already received this link, but there are various offers and campaigns for newcomers to Canada. So definitely check that out. And we have different platforms. So we do offer a class where you can check out the platform. During the Q&A session, we may have the chance to show you what our platform looks like. But if we don't, we do offer lots of classes. And then lastly, so Caitlin mentioned all the classes, and even before opening the account, some of our materials are available online through our social channels. So make sure you scan this code from your phone, and then check out all the video lessons. And then call to action is make sure you define your financial goal, which you already did today. Congratulations, you took the first step by taking our survey or poll. And then follow us on our social channels. And then lastly, offer the current offers and campaign if you feel DIY investing is something you might want to look into. So thank you so much, everyone. And next is Q&A. Sorry, we went over a little bit of time, but this is where we can answer some questions from the audiences.
Awesome. First things first. Oh, sorry, Caitlin.
We get too passionate about investing and we can't stop talking.
We get too excited, right? We go over time in our master classes too. So.
I thought it was super engaging. Thank you so much for the presentation. On behalf of the audience and CanadaVisa, big thank you. So we're going to move on to the question and answer period of this webinar. Just a quick reminder to everyone that because a few of you asked, this webinar is recorded and you will receive the slides tomorrow. So if there's a section of this presentation that you want to review in more detail, please look out for the email tomorrow in your inbox. All right, let's move to the Q&A portion. Oh, and if you have any follow-up questions to the questions that we asked or the responses that you heard, please continue to ask those in the chat, and we'll try to get to as many of them as possible. All right, starting off with the first question from Heather, which came in on the webinar registration form. Heather asks, as someone completely new to investing with a small amount of savings, what do you recommend as a good starting place?
Amy, do you want to take that, or do you want me to take that?
You know what? I can answer this one, so let me answer it. Caitlin's a senior, so I'll throw the difficult ones to her. So yeah, Heather, well, welcome to your investing journey, right? So as Caitlin mentioned, you can really start small. And we talked about risk tolerance a lot, and that's how you feel when you see your investment fluctuate. So that's why if you're new, starting small is good too, because when you look at your investment, you'll know how you feel if you chose those investments like stocks that fluctuate in value like daily or by the minute. So as a starting point, we definitely recommend all our learning materials that's available on our social channels, YouTube, Facebook, and Instagram. We've got free video lessons that you can watch anytime. They're all very short too. So you can learn about these even without opening an account with us. So start from there. Make sure you follow us. How does that sound? And did I miss anything, Caitlin?
No, I think that's great. Like you said, you don't need a lot of money. And we do also have different webinars available on ways to cut costs. So kind of to be creative and find extra money where I know everything's so expensive. It can be really hard to find extra funds to do things like investing when it doesn't seem like an urgent need. But there are lots of creative ways to sort of cut costs, reduce some of the expenses that you might have, just be more mindful about how you're spending your money. And then hopefully you can kind of scrounge up a little bit extra to put in these investments because it is important to start. So even if you only have a little bit, that's all you need to get started.
Awesome. Thank you. Kyron asked on the submission form for the webinar, FHSA, TFSA, how to do self-directment for those accounts.
Absolutely. So I can grab that one. I did see a question come in as well about types of accounts that you can open. So about being permanent resident versus Canadian resident. So I did say about account types, and that was specific to TD Direct Investing. So with TD Direct Investing, you can open a non-registered account if you are not a permanent resident, but if you are a permanent resident, you can open the other types of accounts. So that is specific to us. Other institutions could be different, or even, at the branch level. So I am speaking specifically for us. That being said, we don't currently have first home savings account, but it is coming up very soon. We should have that account type very soon. We do have tax-free savings available on two of our platforms, so both TD Direct Investing as well as our Easy Trade platform. And so with those accounts, they're the same as investing in anything. So all you have to do is put the money into the account. So you'd make a transfer, deposit money into the account, and then you can purchase any of the investment types we talked about today through that account. So you can buy mutual funds, exchange traded funds, stocks, bonds. Any of those investments are available within those account types. So it doesn't make a difference whether it's that account type or another, if that answers your question, hopefully. And as I mentioned, we do have classes on specific account types where we kind of get into detail about when you might use that type of an account, what type of savings goals you might choose that account type. So check out our schedule for classes or online, and you'll be able to learn a little bit more about those.
Awesome. Thank you. JD asked in chat, he would like to know more about mutual funds and ETFs and how to start investing in them. Maybe you can give JD some direction.
Yeah, absolutely. Let me take that. So yes, both mutual funds and ETFs are available through TD Direct Investing, Webroker, and Easy Trade. Oh, sorry, not Easy Trade. Easy Trade is only TD Exchange Traded Funds, but yes, these investment funds are available through our Webroker platform. And essentially, you're hiring somebody to purchase investments under these investment funds. And these funds have an investment goal, and they invest in particular assets that fit in that investment goal. So again, first thing first is to define your financial goal. And then you need to go about researching which fund could be suitable for investing for your investing goal. And this is, again, like a really, we have classes and videos that is almost like an hour long, lots of information. So what we suggest is, yes, go to our YouTube channel where you can watch video lessons on what are these funds, what's the difference too, right? Like frequent frequently asked question is like, what's the difference? What's the difference between these mutual funds and exchange traded funds? And Caitlin's sharing her screen. So this is our web broker platform, and you could do researches using these funds. Using the screener tool or the research tool using web brokers. And this is our learning center. One of the perks of opening a web broker account is that this learning center is my favorite tool on web broker, where you can just type in the keyword like funds, and then it shows all the video lessons and articles that you need you could start with learning. And some of these videos, again, are available through YouTube. So yes, you can definitely start from there, JD, and hope that answers your question. And Caitlin can maybe show us a bit on web broker, what it looks like.
I was just going to say, we have a course called Investing in ETFs and Mutual Funds, and it has 11 classes. It's a total, or 11 lessons, I should say. It's a total of 45 minutes. Each lesson is very short. They're only a few minutes long, but it does go into what are the funds, how you can research them, what an index fund is, if you've heard about that before, how you can choose between funds. There's really a ton of information on here. As Ayemi mentioned, it is available also on our YouTube page. So you could go there, or you could come within our Learn Center and go through some of these things. And as she mentioned, if you typed in here, exchange traded fund, it'll actually pop up and show you stocks and ETFs or video lessons. So you can see right here, there's lots of different videos that we have on that topic specifically. So we could just go ahead and click, and it'll show us the video that kind of goes through that content. So lots of stuff available. I know we've mentioned a lot, all the stuff we have. So I wanted to just quickly show you where it is and how kind of easy it is to navigate and find that stuff.
Great. And just JD asked a follow-up question, I think, to the tax-free accounts. Are there monthly maintenance fees on those accounts in TD?
Great question. So our accounts with TD Direct Investing, there is a quarterly maintenance fee. So every 3 months, there's a maintenance fee, but you can waive it if you have $15,000 with TD Direct Investing, or if you place 3 trades per quarter. There's a few other ways to waive it. If you're concerned, if you think you're going to have less than 15,000 or not meet any of that other criteria, TD Easy Trade has no fees. There's no quarterly maintenance fees, and you can do 50 free trades per year. So it has some free trades available, so you can place some different trades, as well as ETFs are free there as well. It is a more basic platform for those of you just looking to get started. It doesn't have as much as our web broker platform has, but if you're just kind of getting started, it may be a better fit for you as well. So yeah, if you think it's going to be less than that you're investing, then you could look at TD Easy Trade with no fees. Otherwise, 15,000 will waive that fee with direct investing.
Awesome, thanks. For this next question, feel free to pass on it if it's too specific. But Lakvinder asked in chat earlier, are these fixed income returns historically capable of beating inflation?
Ooh, that's a loaded one, right?
Okay.
I actually love that question. Yeah, so it's a little bit more in depth than what we've kind of been covering today, but I think in the world recently, we've heard the word inflation quite a bit, certainly in Canada and the US. And inflation essentially means that everything just gets more expensive, right? You look at your grocery bill and what it cost last year to buy, your staples is going to be less expensive than it is this year. So essentially, our money needs to grow enough to be worth the same amount each year. Plus, it needs to grow extra, right, in order to help us meet our goals. So that's kind of essentially what keeping up with inflation would mean. When we talk about fixed income, the idea with fixed income is that it should be able to beat inflation, but not all types of investments will. So we talked a little bit about cash and cash equivalents, like guaranteed investment certificates. So very low risk things don't have a lot in the way of return. So those investments probably are only going to be keeping up with inflation, maybe at best. And not beating inflation and not getting extra return over that. So when we talk about fixed income, oftentimes we wouldn't put just money in fixed income unless you have a really short time frame. You can't afford to lose money. If you're looking for growth, you do generally want to incorporate some of that equity to make sure you can get that growth piece as well. So that's typically why when we talk about building a portfolio, we talk about all these different pieces of the portfolio, because we want to get a mix that's right for you. So not too high risk, but also that it's going to make you enough money to meet your goals. So I would say, I'm not sure that fixed income will
Good
necessarily
answer.
beat
Yeah.
inflation,
And we
but
did
that's why
Oh,
we would
sorry,
talk about
Caitlin,
a
go
way
ahead.
to sort of build in some equity potentially as well. Even a small amount will help you with that growth piece.
Right. And on top of the classes and video lessons we offer, we also invite industry specialists, like investment advisors, who have different opinions on these topics. And one of the guest speaker we had in the past would show a chart of how what inflation in the past has been, and what the GIC, GIC or fixed income, like how it could not beat inflation in certain periods. So check out all these different webinars. It's all recorded, and you can listen to different experts, and also about how asset allocation is important to combat inflation.
Awesome, thanks. Abraham asked, on the topic of advisors, how can I find an advisor to guide me through the process?
Should I take that away?
Yeah,
sure. So this TD Direct Investing, where we represent today, it is DIY. So as you saw in our disclaimer, we don't give any advice, but in different departments of TD, there are advisors. So if you need that hand holding, you could consult our other departments like the TD Bank. There's also TD Financial Planning, and also investment advisors too. And for those different advisors, they have different minimum requirements in terms of the initial investment. So I do encourage you, if this is something you want to explore, go to your closest TD branch when you are in Canada, or if you are in Canada already, and then talk about what kind of service you're looking for, what kind of investments you have. And also the branch rep too, they can be your advisor too. There's mutual fund specialists that can help you with your investment goal.
Great, thank you. Emirates asked, can you please share safe apps that can help with buying of shares and investing?
Absolutely. So that is definitely a concern. You want to make sure that your money is safe when you're investing, right? You want to make sure you're dealing with a trusted institution. Of course, as I mentioned, we represent TD, as you know. So of course, we're going to say that our app is a great one to use. And it is. It honestly is very user-friendly. As I mentioned, we have two kind of main platforms. Our web broker, which I showed you a moment ago, it also has the app, like a TD app to use for buying and selling. And we have TD Easy Trade, which is app-based only, and that's the one that's free, doesn't have those quarterly maintenance, and it has 50 free trades a year. So both of those apps are the TD's reputation, right, through there. So have lots of security and privacy, no concerns whatsoever as far as that. It's extremely safe to invest on those platforms. There are a lot of other investing platforms out there. You just have to make sure you do a bit of research and make sure that they are reputable. Typically, if you're dealing with kind of the big five banks, that's usually a good indication because our banking system in Canada is quite stable. So that's usually a good place to kind of be comfortable. Outside of that, I can't really say a whole lot about other institution apps, but I can confirm that ours is absolutely, we have great apps. We have two different options for you, and they are certainly secure for purchasing, as I mentioned, mutual funds, ETFs, and stocks.
Great, thanks so much. Maybe we'll ask one more question before we wrap up the webinar. We have a few questions here about different investment products. So I think that one came in from BP that asked about futures and options, SPX, and then Adekoya asked about REITs now. Maybe if you guys can talk a bit about what kinds of products are offered on your different platforms, and then that can help direct people to sort of reach out for next steps.
Sounds good.
Absolutely.
Okay, yeah. Caitlin, you have the web broker open, so you can show all the investment types. Do you want to do that?
Yeah, absolutely.
Yeah.
I was just going to mention, so with option trading, it certainly is, there can be higher risk involved with options trading. So always want to make sure that you do have the level of knowledge required, and you do need approval in order to trade options. But you are able to trade options within TD Direct Investing. Sorry, I'm just going to click this little buy sell button, and you'll notice here you can buy stocks and ETFs. You can also do option trades, mutual funds, and guaranteed investment certificates. We do not have futures. There are no futures available to trade with TD Direct Investing. So I believe that was the F and O piece. The F piece was futures. We do not have those. However, we do have REITs. So REITs are real estate investment trusts. They come in the form of ETFs, or they're not really ETFs. They're outside of that, but I believe we can find them under. So for example, I'm trying to think, I don't know any common names, but let's go into screeners for a second, and I think pull up real estate investment trusts here. This is just one of our tools where we can take sort of all of the investments out that are on the market right now and filter them down based on specifics. So if I do just trust units, this will show me, for example, see, I have a real estate trust here, property trust. Yeah. So there's lots of different trusts available. Specifically, the REITs would be the ones, of course, that say REIT at the end. And again, you purchase them just like you would purchase a stock. So for example, if I went into to do a purchase for this company, I could click buy. Let's see, what is it? DRR.UN. Just going to copy that. So if I went in to buy, it's just as simple as kind of putting the symbol in, and I can go through the process of purchasing this individual real estate investment trust. So real estate investment trusts are different than other types of investments. They are really meant to provide income, so kind of money coming out to you, and not as much in the way of growth. So just keep that in mind, that there's lots of different types of investments out there. We do have education on real estate investment trusts. If you want to learn more about them, you can just go again. And I do see there's a question asking, like, how do you get access to the platform? Our trading platform, you do have to open up an account with TD Direct Investing to get to that learning center. But as we mentioned, and maybe we can even throw it up on the screen again there, we do, and you'll receive the presentation as well. You'll see that the QR codes, you can use your phone just to scan that and go to the website, to our YouTube channel, our Facebook, as well as Instagram. And on there, we have lots of video content available, so you can learn about all this stuff there. Anything I missed, Iami?
No, that's perfect. And I was just trying to put the QR code on screen. So let me do that. Yeah, there we go. So yeah, like these tools or these social channels, YouTube specifically, we got so much videos. We did invite a guest speaker about REITs, I think not too long time ago. So check those out. Free resources, right?
Yes.
And you don't even need an account yet.
Awesome. Well, thank you guys so much. On behalf of CanadaVisa and of course the audience, we really appreciate the presentation today. Once again, super engaging, and we learned a lot. Got some great questions from the audience. So thank you, audience, for joining. We're going to have more of these webinars going on in the future, so keep an eye out on your inbox. Tomorrow, you should get a copy of the slides for the presentation as well as recording. So yeah, once again, thank you everybody for joining. And maybe I'll hand it off for TD if you want to have a quick closing statement before we end this webinar.
Yeah, I was just going to say thank you so much to CanadaVisa for having us here, and for the audience. Thanks so much for your participation. It always makes it a bit more fun when we can get you in on the process, get you kind of getting your vote in with the polls. It always makes it a little bit more fun and exciting. So hopefully you learned something new today. Hopefully we've given you some stuff to think about and some resources to use moving forward in your financial journey. And we hope you choose to do that with TD. And if you don't, either way, we wish you good luck, and hopefully you can join us for another session in the future.
Thank
Awesome.
you so much.
Thank you so much. Have a great rest of the day, everyone, and we'll see you soon. Bye.